Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the session for Thursday the 12th of January 2017 has finished. It's reasonably likely at this stage that the upward movement for gold is over for now and a deep correction may have begun at the end of the session. But we absolutely need to have some price confidence and trend channel movement or a breach of the channel before we can have reasonable confidence in that expectation. The bottom line is, while price remains within the gold channel, it is entirely possible it could continue higher. If we see a new low below 1183.15 at this stage, we can have some confidence that we've had a trend change. If price moves below that gold channel, have a lot of confidence that we've got a deeper pullback beginning. At this stage, this little red candlestick with a very long upper wick gives a bearish signal, and this intermediate wave 1 beginning here, and if it's ended here, would have lasted exactly a Fibonacci 21 days or sessions. Gold quite often exhibits waves that have Fibonacci durations. That's one of the reasons I'm looking out for an end to upward movement here. We've also got an overshoot of this best fit channel. I'm drawing it from this high to this high and pulling a parallel copy down to sit across these lows. We've got a little overshoot here. Now we've got an overshoot at the upper edge. That's really typical for gold's fifth waves. Typical of commodities, it often exhibits swift, strong fifth waves that end quite strongly before price reverses. So that's another indication, apart from the candlestick, that we may have a high in place. So those are pretty much my reasons today for labelling intermediate wave 1 over and looking out for a deep correction now for intermediate wave 2. But the bottom line is that while price remains within this gold channel, it absolutely must be accepted it could continue higher. We should expect that it's somewhat likely it may continue higher. If you want to trade this correction to the downside, reduce risk by waiting for some confirmation and having confidence that we have a high in place before entering short. I will expect when price gets down to this trend line, either it's going to find support and bounce up, and if that's how it behaves, then we may not have a high in place. But if on the first test of this trend line price slices through, have a lot of confidence that we are now in intermediate wave 2. If that's how price behaves, if it slices through this trend line quite quickly, look out for a throwback to find resistance, and if I want to go short on intermediate wave 2, I would wait for that setup and I would enter there. That would reduce risk quite substantially. We would have trend channel confirmation and you'd have a good entry point. And at that stage, if this trend line provides resistance after being breached, then you could set stops just a little way above that line, having a reasonably small risk for a short position. However, having said all of that, this for gold, for this wave count, this is my preferred wave count, the next wave down for gold is expected to be a corrective wave. They don't always offer very good trading opportunities, so if I do want to trade this one short, if we get that trade set up, I will be entering short, but I will not be holding my trades for very long, maybe 1 or 2 days at the most. If this is a deep corrective movement, then it could have a big overlapping three-wave movement, or it could be a huge big choppy overlapping sideways movement. Effectively, it's expected to be a consolidation within an upward trend. But one reason why it might offer a reasonable short-term trading opportunity is the very first second wave in gold's new trends are often very, very deep. After the December 2015 low, the very first of a series of second wave corrections was very, very deep. I think it was 0.97 depth of its corresponding first wave. And so it could offer a really good trading opportunity, but be very careful how long you hold those. Only a short-term trade possibly. It can't move beyond the start of 1 below 1123.08. If you are wanting to trade the second wave correction, please remember my 2 golden rules. Risk management is absolutely essential for all trades, and it is the most often overlooked aspect of trading, overlooked by those new to trading, and the reason why they wipe out their accounts at least once early in trading careers. My 2 golden rules for risk management. First one, always use a stop. Second rule, do not invest any more than 1 to 5% of equity in your account on any one trade. And if you are a beginner trader, reduce that to 1 to 3% of equity. for any one trade in your account. Trading without stops is suicidal. It allows all of the equity in your account to be exposed to risk, and that's exactly how novice traders wipe out their accounts. Let's have a look at the hourly chart where intermediate wave 1 may have ended here. We'll look at -3 high, this point up here, -4, a double zigzag, -5, now a complete 5-wave impulse. This overshoot of the upper edge of the channel looks like a fairly typical strong 5th wave to end a 5th wave. However, the risk here is it also could be the middle of a 3rd wave. It is entirely possible that my wave count for intermediate wave 1 is wrong. We could move the end of -3 from here up to here, because this also looks like the end of a 3rd wave. Now, it's impossible to tell, while price remains above this confidence point, which of those two scenarios it is. But if we see a new low below this point, then downward movement cannot be a 2nd wave correction within this final 5th wave, and so at that stage the final 5th wave would have to be over. But what I'm going to wait for, because this offers a lower risk entry opportunity, is a clear breach by downward movement of this gold channel, which I'm drawing in the same way on the daily and hourly charts. So far, price has found support a little bit above the lower edge of this channel, quite close in this case here. And so if this trend line is breached clearly by downward movement, not sideways, it has to be breached by downward movement, then we would have a strong indication that we probably have a high in place for gold, and we're probably in the early stages of a deep 2nd wave correction. My initial expectation would be for it to reach at least the 0.618 Fibonacci ratio of intermediate 1, about 1155, but it's quite likely to be quite a lot deeper than that. So when price gets down to the 0.618 Fibonacci ratio, we'll be looking at structure, we'll be looking at weakness and downward movement. If the structure is complete and it's showing weakness, it may be over there. But if the structure is incomplete or no weakness to downward movement is seen, then I'll expect it to continue to be deeper. If intermediate wave 1 is over in a Fibonacci 21 days exactly, then intermediate wave 2 could reasonably be expected to last about a Fibonacci 21 or possibly 34 days or sessions in total. Gold's corrective structures are quite often longer in duration than their counterpart, impulsive structures. And this is an alternate wave count at the weekly chart level. It expects that this upward movement is just a deep 2nd wave correction within an ongoing bear market. And to see the difference, and there is a big substantial material difference at the daily and weekly chart level for these two wave counts, you have to look at historic analysis. You have to look at weekly and monthly charts. Either way, both wave counts expect a 5, 3, 5 up. What happens after that is going to tell us which of the two wave counts is correct. For this one, we have an upper invalidation point. Primary 2 can't move beyond the start of 1 above 1374.81, and so that's the price point to the upside which differentiates the two wave counts, but we won't be there for months yet. After a 5 up, a 3 down can't move beyond its start below 1123.08, so there's no difference in terms of expectation for the short or mid-term for the two wave counts. Some classic analysis. I won't go over the weekly chart. I did that at the end of last week. Let's have a look today at what the daily chart tells us. An overshoot of the upper edge of this channel looks like a reasonable typical end to gold's movements, but it also, as I said for the Elliott wave count, looks like we could be seeing stronger movement and that the channel may be overshot as gold comes to a parabolic end to this upward movement. It's impossible at this stage to tell which of those scenarios will play out, so that's the risk to the wave count and this analysis at this stage. The long upper wick on today's candlestick is bearish. Yesterday I said that the long lower wick to the candlestick was bullish, and I was looking out for the possibility of one more day of upward movement to find resistance about 1210. It looks like that might be what's happened. Price has found resistance very slightly below that point. The bottom line still is while price remains within this gold channel, which I'm trying to draw in the same way here on stock charts data as I am on my Elliott wave counts with bar chart data, while price remains within that, the bottom line is allow for the possibility of more upward movement. A slight bearish signal today from lighter volume. Today the rise in price was not supported by volume, so that's slightly bearish along with the upper wick. On balance, volume is still bullish and the support line is now quite some distance away. If and when we do see a pullback, there's plenty of room for it to fall. RSI is still bullish and exhibits no divergence with price. Now, I would be a lot more confident that we have a high in place if we saw single or double divergence between price and RSI. We have absolutely none, and so the risk is my wave count could be wrong, price could continue yet higher. If it does, the next resistance line is quite some distance away. ADX is increasing today and the positive DX line is above the negative. This is a lagging indicator. It's based on 14-day averages. It's telling us at this stage that gold is in an upward trend. It's below 35, so there's still room for the trend to run, but it's nearing into extreme territory because the black ADX line is still above both directional lines. As price is moving higher, ATR is overall flat. Now this could mean one of two things. It could mean that this upward movement is another correction within an ongoing downward trend, or equally as likely, it could also mean that gold is still in the very, very early stages of a new upward trend. So this flat ATR tells us that neither the main or alternate wave counts at the daily and weekly chart level are correct, because it would fit the situation for both. Gold quite often exhibits weak first waves. It strengthens the trend toward the end of its third wave and then explodes at the end of its fifth wave. It's very typical for commodities, so this is quite normal. Stochastics is overbought, but this can remain extreme for quite reasonable periods of time. It does not exhibit divergence with price either, so that's another warning. My wave count certainly could be wrong. Price is moving higher, stochastics is moving higher. Price certainly could continue for a few more days before finally turning. As price moves up, Bollinger Bands are widening. There is volatility to this upward movement. There's some strength inherent in this upward movement. It's closed close to the upper edge of Bollinger Bands for a few days in a row now, but that again does not tell us that price has to turn here, because during a trend it can sit at the extreme edge of the Bollinger Band range for several days in a row, so it certainly could continue up. And so for those reasons, there is still a fair amount of bullishness in this market, and the bottom line has to be use this trend channel. I'm not going to be entering long because this trend is extreme. It's lasted a Fibonacci 21 days, and I see a slight bearishness today, but I'm not going to be entering short either because I don't have that set up for reasonable confidence that we've had a trend change. I will be watching and waiting patiently for a good trade set up for this market. That's all for me with your gold analysis, and I hope that all our members are having a fabulous day. And if other viewers would like to access daily gold analysis, you'll find it in the membership area of Elliott Wave Gold.